A very good evening and a very warm welcome to State of Business on our television. I am Savindri Jawardena. Let's look at the top stories for the day. COVID-19 vaccines will power 5.5% global economic growth in 2021, IMF reprojects. Sri Lanka plans to produce quality train compartments for importation purpose. News in detail. International Monetary Fund announces that they are confident with the world's fight against the coronavirus and projects global growth for 2021 to be 5.5%. Addressing a press briefing last Tuesday, IMF Research Department Director Geeta Gopinath said that the new forecast is a bit higher than the previous forecast.
In our latest World Economic Outlook, we are projecting global growth for 2021 to be 5.5%, which is 0.3 percentage points above our previous forecast. And then growth is expected to moderate to 4.2% in 2022. The upgrade is owing to positive effects that have come upon with the onset of vaccinations in many countries, and also because of the additional fiscal policy support that's been provided in some economies like the US and Japan. Now, the positive effects have been partially offset by the negative consequences of the raging virus in many countries and the containment measures that have had to be put in place to deal with it. In just 3 months since our last forecast in October, COVID-19 deaths have doubled to over 2 million, with new waves of the virus peaking in many countries of the world. In these same 3 months, multiple vaccines have seen unexpectedly strong success, and several countries have embarked on ambitious vaccination drives.
IMF Research Department Director Geeta Gopinath also opined that advanced economies such as the United States and China are generally expected to recover faster. She also added that over 150 economies are expected to have per capita incomes below their 2019 levels in 2021.
If the downside risks were to realize, we could see a tightening of financial conditions, which could have a real negative impact on the economy at a time when debt is at record highs in many countries. Projected growth that we see for this year follows a severe contraction in 2020. Now, even though the estimated collapse for 2020 is somewhat less dire than we had projected in October, the crisis in 2020 still remains the worst peacetime global contraction since the Great Depression. And because of the partial nature of the rebound, over 150 economies are expected to have per capita incomes that are below their 2019 levels in 2021. And that's expected to decline only modestly to around 110 economies in 2022. Now, at $22 trillion, the projected cumulative output loss over 2020 to 2025 relative to the pre-pandemic projected levels remains substantial. Now, the strength of the projected recovery also varies significantly across countries, with large differences in projected output losses in 2022. For instance, China returned to its pre-pandemic projected level in the fourth quarter of 2020, ahead of all major economies. The US is projected to surpass its 2019 levels this year, well ahead of the euro area.
Geeta Gopinath, IMF's Research Department Director, addressing the press briefing on the World Economic Outlook update, also expressed her views over India's economy and said that there's still some distance to go. She was positive on India's efforts but gestured that India is still 9% below its pre-pandemic projected level and needs to work hard.
So when we look at India numbers, of course, you have to cumulate over the last 2 years, so like 2020 and 2021. India is estimated to have had a contraction of around negative 8% for this 2021 fiscal year. And then we do have, as you said, bounce back in growth to around 11%. But again, cumulatively, by the end of 2022, India is still 9% below its pre-pandemic projected level. So we are seeing India come back to its 2019 levels in 2021, but it's still below. Why do we have these upgrades? We have the upgrade one because activity and mobility particularly came back much faster than expected in India. We have not seen another wave. In fact, we are seeing a very strong decline in cases, which is, again, a bit different from other parts of the world. And so these factors, including what we're seeing in terms of high-frequency indicators, point to a somewhat faster pace of recovery. But again, there is still some distance to go.
Stay tuned for more news right after this break. Welcome back after the break. Transport Ministry announces that the President Gotabaya Rajapaksa has directed them to produce quality train compartments targeting the importation. Transport Secretary Monty Rantunga revealed that Cabinet of Ministers even has approved the project and will go soon with the local expertise.
The Cabinet has again decided to give another 100 railway compartments to be refurbished by the country company. So they have done it very nicely, and this case is actually, we must be proud that we have Sri Lankan knowledge, capacity and that caliber in country to develop this railway industry. We have been instructed by HE the President to not only refurbish the compartment, we want to produce the compartment here in Sri Lanka. Now we have been given the cabinet approval and now we are in the process of doing that. So then if we are going to do this, actually we can, over 50% of the requirement of the railway could be fulfilled within the country. So that's what our aim, that's what our objective.
In the meantime, trading at Sri Lanka's Colombo Stock Exchange was halted shortly in the afternoon over a technical fault at the back office systems of several brokers. An official from the Colombo Stock Exchange said that the technical error affected on a number of brokers and the CSE decided to halt trading for some time. The CSE official, however, assured that the unexpected system failure was not a problem with the trading system of the CSE and they managed to sort out the issue within a time frame of about 45 minutes. He said that the trading was halted at 12:07 p.m. and trading resumed before 1 p.m. He asserted that the brokers had experienced a technical glitch in a system supplied by a third-party provider and the CSE had to halt the trading to make sure that any brokerage firm is treated unfair. Meanwhile, Sri Lanka rupee quoted firmer around 190 rupees and 50 cents to 191 rupees and 50 cents level in the spot market this morning. Previous day was a holiday for the CSE and on Wednesday it was shown as 192 to 193 levels, while bond yield flat in dull market trade after bond auction. Trading on Wednesday ended on a positive note and the all-share price index gained 146.19 points to close at 8,812.01. The S&P SL20 had also gained 1.28 points to close at 3,505.33. The turnover stood as 14.4 billion rupees and over 497 million shares were traded during the day. Head of Research of First Capital Holdings, Dimantha Matthew, commenting over the CSE's behavior for last 5 days, said that overall banking sector was seen in an uptrend during the week and that the Sampath Bank was leading the list. Providing a forecast for the coming week, he also added that same upward trend will be available in the next week too.
However, with the split announcement in Sampath Bank, we saw Sampath Bank rallying during the day, and in addition to that, we saw other banking shares also on speculation rallying together with Sampath Bank. So overall banking sector was on a bit of a uptrend, and we saw a major bull run in the market continuing from where it left last week. The run has been continuing now for 3 or 4 weeks on a continuous basis, and This week also was another week where the bull run continued. By Wednesday, the ASPI breached the 8,800 mark to close at 8,812, and that has been the highest point so far. Net foreign outflow is above 6 billion rupees. With it, what we are seeing is foreign selling pressure now constantly increasing, with blue chips also getting into the act.
Stay tuned for stock updates right after this break. Welcome back after the break. Trading at Colombo Stock Exchange ended on a mixed note today. The all share price index dropped 143.94 points to close at 8,668.07, and the S&P SL20 gained 8.85 points to close at 3,514.18. The turnover was 13.4 billion rupees and over 335 million shares were traded. Up next are forex rates. And that's all news for today. Have a very good weekend and take care and good night.